Hey guys, GoldStreams here. Earlier on we tried to do a live simulation session and unfortunately our streaming software actually crashed on us and it didn't let us finish. So we're going to be repeating the process. Going to be picking different dates this time. Obviously it makes no sense to pick the same dates. So we're going to go from the 1st of August to 2024 and we're going to do till the 1st of November, again 2024. We only want Mondays. Okay, perfect. Give us a total of 5 dates. Go. Okay. Random picker. Let's see. I'm going to pick us a random date here. And that's the date we're going to use. Perfect. So it gives us the 5th of August, 2024. All right, we're going to new simulation. Move this over. 2024, August the 5th. So we're going to start. I wonder what. All right, so fix that up. Fixed. Okay, 10 points. Over. Start 30-minute chart. The 1 hour and the 4 hour. Open these up. Okay, so we're going to fix these up. Perfect. Scale fix. All right, amazing. So this is the 4 hour time frame on the 5th of August. I'm going to fix all the time frames at once. Let's see if we can. Properties, scale fix. Okay, so this is the 1 hour time frame. Fix the 30-minute time frame up as well. Properties, scale fix. Okay, move this over here. Right, and the 15th. Great. Scale fix this as well. So this simulation software is Soft4X. Okay, same one we was using earlier. Like I said, unfortunately the streaming software actually crashed and we was unable to continue. So the first thing we want to do is obviously move it over to our session, which is pre-London session. Okay, so that shows 5 a.m., 2 hours before London Open. All right, I want to go on the 4 hour time frame and understand sort of exactly what we're working with the 4 hour time frame. So we've got gold coming up to a resistance here on the 4 hour time frame. Looks great. And we've got a support down here. Actually, I would say we've got support down here on gold. Right, I know the support, it's 80 pips away. Okay, but the reason I put my support here, not here, because 80 pips, very big range, easy for us as scalpers to take 20, 30 pips away out of it. Right, want to clone these over to the 1 hour time frame and see what the 1 hour is doing. So the 1 hour is also moving up to the support area up here. All right, so this very commonly happens, and I like this market structure because this is something you see very often in the markets. You come in and there's a big move that's already happened. Let's just tidy these up a bit here. See a big move that's already happened. As you can see, gold's come down, create support, and it's moved already like 300 pips to the top side. Is this the ideal place to take a buy? No, you don't want to be taking buys here just because you've got a lot of clean range. Gold's already moved a lot. You want to see how the market now, sort of what sort of market structure you can get, right? And by trying to understand market structure, it will allow you to take a trade. And see, now we can see that gold's making a resistance, right? So gold's making a resistance here on 24.53. It's got clean range all the way down to 130 pips, all the way down to 24.37. All right, and then below that we've also got clean range. So this is what we're working with on gold at the moment. So we've got resistance being formed, We've got a rejection wick to the top side. We've got a 30-minute close bearish. Now on the 15-minute time frame, we can get a little bit more information from the market. We can see that we've got, right, this is perfect. So you've got sort of resistance here on the 15-minute time frame as well, and you've got support down here on the 15-minute time frame, and you've got clean range of like 180 pips. Let's just see. This 30-minute closing bearish, it's a massive uptrend. It's not a confirmation for you to take a sell as soon as you come into the market. All right. Ideally speaking, you want to keep an eye on the sort of the higher time frames. The 4 hours broken the high, right? The 1 hours sort of made a top wick. It's come down. Let's see what the 1 hour is going to do. If this 1 hour candle starts breaking this low, it means the 4 hour would then flip bearish as well, and it means it couldn't maintain bullish momentum, right? And it means that we've got sort of market structure forming on the 30-minute for a sell as well, and then we'd be comfortable taking a sell, right? Just to get sort of catch some retracement. And this is a massive range on gold, so I want to be keeping an eye on the 1 hour time frame and seeing if we can get a sell formed on the 1 hour time frame. I don't want to take a sell here just because it's breaking this 30-minute low. It's not enough confirmation. I want to see the 1 hour break its own low, and I want to see the 4 hour flip bearish. That would give me sort of confirmation for a sell. Speed this up a bit here, right? So you can see now it's breaking low. Great, so that's where the low was broken. Going to enter our trade. Now the whole point of this trade, and the whole reason, just entered it with 2 lots, meant to put it on risk. Oh well, it's fine. Get the gist. Go on sessions. No trades here. So there you go. Okay, so let's break even. That's fine. I'm going to close that, ignore that trade, and we're going to enter the trade how we would normally enter the trade with 2% risk. Visual mode. I'm going to take a sell. What is it doing here? I don't understand. I want to take a sell here with 2% risk. Visual mode on. What is it? Okay. So ideally speaking, we'd want to see the market come down, sort of test this level down here, right? Move down, and so from my understanding, this is 100 pips. Okay, the stop loss isn't going to be 70 pips up here. The stop loss is going to be up here. The reason the stop loss is going to be here, so that's 25 pips. The reason the stop loss is going to be here is because if this candle broke the low, I don't want this candle. It has no reason to come up and break its own high. If it starts breaking its own high, then it means the entry is not valid. The sells are no longer valid. All right, so we're going to hold it until around this level here, where we've got previous sort of market structure and previous problems, right? Let's see exactly sort of how this moves. We've got the 15-minute here as well. Going to keep an eye on the 15-minute, see what the 15-minute does. And we've got a trade. Let's just put it in pips. Okay. I think this is, yeah, so this is like 10 pips. I don't know what it showed in 0.13. Nice, 17 pips, 18 pips. This is good. We're going to wait and see how this 15-minute candle closes. Right, and we've got the 30-minute coming up as well. Perfect, it's great. So this is about 30 pips, 37 pips here, straight away. Perfect trade, up 2.5% for the day, right? We risked 2%, we're up 2.5%. What we're going to do, close partials, close 90%, put it BE, remove the take profit, and let the trade ride at this point. It can do whatever it wants. That's what I'm content with, okay? The reason I'm closing this trade and taking partials, this candle has no top wick. It's an uptrend, technically speaking, right? we entered the trade based on the 1 hour time frame breaking the low and the 4 hour breaking its own low. Now, there's a very sort of strong chance that the candle can come down, create support, and move back up. Right, on the smaller time frame, like the 30-minute time frame, it could reject this area completely and come up and start obviously breaking highs and continuing the trend. Slow this down here a bit at 200 pips. Right, cool. So we're just going to let this ride, see where it takes us. We're going to hold this. So this is around 60 pips, 70 pips. Perfect session. And we can hold this trade until sort of wherever you see yourself comfortable with. This is about 2.9% of the account. There you go. 3% of the account. $300 in a day on a $10,000 account. Right? First day in the week. We're going to close this position. We're done. We're going to move over to the next day. So open up sessions here. Get the 4 hour up. Okay, and we're going to move. Oh wow, so the market continued all the way down. But just because this is a simulation doesn't mean I'm gonna hold a trade. I'm gonna treat the trade exactly the same as I would on my live account. I wouldn't hold the trade any longer than that. Right? So we got gold consolidating here, which is great. It's got a lot of clean range at the top side if it wants to move up. And it's got a lot of clean range to the downside as well. If it wants to move down, let's just see on the smaller time frame, see if we can get a bit more understanding of what these zones actually mean. So the wicks on the 4 hour time frame are going to be market structure on the 1 hour time frame, and these wicks here on the 1 hour time frame, so the left hand side. All right, so this is the 1 hour time frame. These wicks here are probably going to be market structure on the 30-minute time frame as well. So let's just keep an eye on that. Yep, so that right. So now we can understand from the 30-minute time frame, we've got clean range of around 80 pips, 70 pips. So the top side, if we can get a break above 24.16, and if we can get a break and close below 24.02, then we've got perfect range all the way down to the bottom side of around 140 pips. Okay. Just keep an eye on that. Let's see what this looks like on the 15-minute as well. All right, so it's pretty much the same zones on the 15-minute candles. This is now where patience is required just to see how the market moves, and you want to wait for sort of market structure that you understand, market structure that you've seen before. Okay. Let's keep an eye on this, see how we can get close. So the 15-minute candle just closed, the 15-minute candle closed bullish, right? But you can see even the 15-minute time frame is sort of it's in its own consolidation between 24.10 and 24.07. I'm not interested in buys up here because there's a resistance 11 pips, 12 pips away. Sells from here to down there, 30 pips, looks great. Let's see how the candle closes. All right, so we've got 30-minute close bullish. The 1 hour candle still open. 4 hour candle is obviously still open. Let's just see what we can get. Let's just see how this moves at this point. Okay, so we've got a 15-minute candle closing. Right, yeah, all right. 15-minute candles closed. Right, very, very strong bearish candle below this zone. 30-minute candle still open. It's coming down towards the support, which is like 25, 30 pips away. The 1 hour candle still open. It's breaking the support to the left hand side, and the 4 hour. Okay. Let's see exactly sort of how this moves and what this does. Oh, that's nice. Right. You see how the 4 hours broken this support and it's moving down at this point. The 1 hour has also broken the support. It's moving down. There's a lot of bearish momentum in gold at the moment. It's breaking levels, but it is coming up to sort of a 30-minute support down here. So let's just keep an eye on it and see what it does. On the 30-minute support, 15-minute candle is also coming down. There's like 8 minutes for the candle to close. Sort of rejecting the support area. Oh, that's nice. Right, so let's just wait for this candle to close. There's 4 minutes left. This candle's closed. There's no point of being hasty. Just be patient. Wait for candle closures. Wait for structure you understand. All right. Just pause this. Slow this down a bit here. So gold's already moved. It's moved 130 pips. Right, 130 pip candle. Ideally speaking, you've got a lot of clean range to the bottom side here, like 100 pips. Right. What I'd want to be doing is I want to see one of two things. I either want to see gold come up, create some sort of resistance, and then continue moving down into this 130 pip range, or I want to see a wick come up, top wick first, and then it start breaking the low. Right? So let's just wait. So the top wick's being made at the moment. See what it does. If it's going to come up, is it going to create resistance? I like the fact that it's not coming up and creating resistance in the first couple of minutes. It's not breaking the low in the first couple of seconds. Gold will do that sometimes, and it's very easy to sort of have fear of missing out at that point. But it's always better to wait for in this case, to wait for the top wick first, and then you want to see the low be broken to give you confirmation for continuing. And if we do enter a trade here, then stops, okay, the low is being broken. Stops are going to go above this current candle, okay, which is like 30 pips. We've got a lot of clean range down to the bottom side. Okay, so it's 5 minutes in. This is where the candle is now breaking the low. I'm going to enter a position up here. I don't know why this keeps sending my stop loss all the way up there, and I don't know who take profit all the way down there. Doesn't matter for the take profit, right? Stop loss is what we're interested in. Stop loss is above this wick. Okay. Enter the trade, 2% risk, open up the trade. If this candle starts coming up and starts sort of testing its own high and breaking its own high, we're coming out of the trade. We're not waiting for our stop loss to get hit. Ideally speaking, we want to see this range start to get filled, at least for gold to come down here, give us like 25, 30 pips to this sort of problem area on the 15-minute time frame. Right, but it's very important just to keep an eye on and see, you know, what gold's going to do, and if it's going to come up and start testing its own high. This 15-minute candles, let me just speed this up a bit here. So the 15-minute candle is about to close in 9 simulation minutes. You want to see it continue down, right? Okay, perfect. So 11, 12 pips, 15 pips. This is good, right? 18 pips. This is perfect. 20 pips. What's the lot size? Okay, 0.58. All right. Okay. Wait for the 15-minute candle to close and see how the 15-minute candle closes. Okay, see how that happens. If the 15-minute candle closes bullish, we're going to close the trade. If the 15-minute candle closes healthy bearish, again, it's the same thing like this candle. We want it to come up first, create a top wick, and then come down and start breaking the low. If it starts breaking its own low instantly, I'm closing the trade. Gold's already moved a lot. It's moved like 130 pips. I'm not going to risk and hold in that. So let's just see what this candle does. Okay, right now it's still moving down. We've got like 3 minutes left for this candle to close. Let's see how this closes. Ideally, we want to take about 20, 25 pips off this trade. Right, so the 15-minute candle is about to close. Perfect. 15-minute candle closed. Right, we're about 20 pips up on this trade, around $110. Right, I want to see what this does. Again, I want this candle to come up, create a top wick first, and then start breaking its low. Okay. See, this candle broke its own low straight away. Yeah, this is not something that sort of I like. 30-minute candle still moving down, right? We've got 30 pips out of this trade. It's not looking good right now because it's broken its own low straight away. Gold can reject this area. very, very easily. So you know what? Let me just modify this. Nope. Let me close partial. Here we go. Close partial. Take 90%. Stops at B. And let this run. Cool. If this wants to go down and fill this whole range, great. We're still going to be in this trade. If it wants to come up and hit stop loss, that's fine. We're set on break even. See what it does. So we've got 14 minutes for this candle to close. See how it moves. At this point, we're just waiting. Let me speed this up a bit here. Let's see what it does. If it, like I said, if it wants to come down and fill this whole range, it's great. If it doesn't, we've taken our partials. We're not interested. Okay, break even. All right, it is what it is. That's why it's important to secure, especially after gold's already moved so much. Right, so we've taken our trade on Monday. This is now Tuesday. We've taken our trade on Tuesday before the markets even opened on London. So not interested in taking any more trades. We're done for the day. Let's move over to Wednesday. See what Wednesday is going to give us, what sort of market structure Wednesday is going to give us. So again, the same thing. As always, take the 4 hour, mark our resistance, mark our support down here. Slowing these so we move them over to the smaller time frames. Right, so smaller time frames. These wicks on the 4 hour here, obviously going to be a market structure on the smaller time frames. So we're going to have to modify our zones. Perfect. So we can see that if gold sort of closes and breaks and closes above 23.95, 23.95, we've got a wick to fill here of around 60 pips, and possible range of like 160 pips. If gold closes below 23.83, then we've got 90 pips down to the bottom side, and we've got wicks of like 40 pips to fill. Now it's just about patience and wait and see market structure that you understand. Cool. Gold's already made a massive move to the top side. You don't want to be taking buys. You're nearing resistance. So patience really does matter. You want to sort of start seeing some sort of market structure and something that you understand. All right. So the 15-minute candle is about to close. I'm going to wait for the 15-minute candle to close. 15-minute candle close. It didn't break the resistance. All right. Then we got set on the 30-minute. At this point, we're just still waiting. Gold's already moved. It's got 1, 2, 3, 4, 5 bullish candles. This is not the best time to take a buy. If you've got 5 bullish candles, you're only taking a buy on the 5th or the 6th bullish candle. How, you've seen gold rally. Yes, we've seen gold rally, and like I say, it can rally and keep going. But what are the chances of that happening? So, okay, 30-minute candles closed. Again, it's respected the resistance to the left-hand side. Okay, it's coming up. If I miss the trade, I can miss the trade. That's fine. The 1 hour candle is still open. I want to see what the 1 hour candle does. If I miss the trade and it shoots straight up, it is what it is. The 4 hour candle is still moving up. It's filled the wick to the left hand side. Let's see how the 1 hour candle closes. Let's see how the 30-minute candle closes. Right, so we've got the 15-minute candle closing in a bit as well. Let's just see how this pans out. See what it does here. So look at this. It's broken the low on the previous 30-minute, right? But it's also broken the high. So it's a volatile candle. And pause this, 15 minutes closed. Right, so we've got a volatile candle. It's broken the high and it's broken the low. For a candle to continue a trend, right? For a trending candle. In an uptrend, it needs to make higher highs, higher lows. In a downtrend, it needs to make lower lows, lower highs. If candles are breaking highs in an uptrend, in a downtrend, the trend is broken. It's no longer an uptrend. If candle, there's no longer a downtrend. If candles are breaking sort of lows, highs in a lows in an uptrend, it's no longer an uptrend, right? So we're gonna have to wait and see exactly how this candle closes. So we've got 1 hour rejecting off this resistance, 30-minute rejecting off the resistance as well. Let's see how this 30-minute candle closes. So we've got 4 minutes for this to close. The reason I didn't enter a trade on the 15-minute time frame, it opened without top wick at all, so it didn't move up at all, and it came down and it broke the low within the first couple of seconds. Right. So we got the 1 hour closed, bearish, bouncing off resistance. 4 hours still open, still bullish. The 30-minute is closed, bearish, bouncing off resistance, and the 15-minute is closed. Now, I don't like the way this has left a massive wick to the downside. Let's see how this candle plays out in the 15-minute and the 30-minute. It can very easily come down and test this support down here, which is like 50 pips away. But at the same time, you have to understand that it's left quite a big wick on the 30-minute. That means price struggled to move down, right? So we're going to have to see exactly what's going on and see, sort of get market structure that we understand. Don't want to enter a trade here, because you're going to have to you're going to get very impatient. You're either going to have to have a stop loss of like 50 pips, right? And expect sort of price to come down and touch the resistance. I think it's a better idea to wait for some sort of support or a break above, like I said previously, 23.95 to fill this wick to the top side. If we get it, if we don't get that, then it is what it is. We're already up like 5% on the account. It's Wednesday, so let's just see how this plays out. All right, so 30 minutes about to close. Yeah, 4 simulation minutes. Let's see how the 30-minute candle closes. Right. See, this is what I was saying about the rejection wick to the bottom side. The 15 minutes creates support. 30 minutes coming up. It's closing in 30 seconds. Let's just wait for this 30-minute candle to close. So, right, there you go. 30 minutes closed above support. Perfect. It's done a little retest on the 15-minute time frame. We've missed the entry on the 15-minute time frame. This would have been the perfect entry on the 15-minute time frame, but we missed it. The 1 hour was also closed bullish. The 4 hours now broken the wicks of the left-hand side. It's got a lot of clean range. Ideally speaking, in this candle, you want to see the market sort of come down, make a little bit of a bottom wick, and then start moving up. So we're going to slow this down a bit. We don't want to miss the entry if that does happen. And obviously stops are going to go back in the zone. And we're going to expect price to come up and fill this wick to the left-hand side. But we want to see this bottom wick be made first before the candle starts breaking the high. Excuse me. All right, let's see how this plays out. Let's see if this candle will now start to flip bullish. It will start to break its own high. Again, you don't want to take an entry. I personally wouldn't want to take an entry, straight away on this candle open, because you haven't really got any sort of decent stop loss or anywhere to place a stop loss, and you've got rejection wicks to the left hand side. So I'd want to see confirmation by this candle, the high being broken. It's like 6, 7 pips away. So I'd rather wait. If I miss it, I miss it. It's fine, but I'd rather wait and see this candle come down, make a bottom wick, give me sort of a better stop loss position, and then start breaking the high. Give me confirmation. for it to continue going up. So the 15-minute candle is about to close in 5 minutes. Switch over to the 15-minute time frame. Let's see what the 15-minute time frame is going to do. All right, so you've got, this is what I mean, you've got a massive candle. It's like 65 pips on the 15-minute time frame, right? You've got a wick that's like 6-7 pips. Makes more sense to wait for the wick to be broken, the high to be broken, for you to get a confirmation, a stronger confirmation for an entry to continue to the upside, then to enter a trade on the candle open in this particular instance, right? Because you've got no stop loss. You know the stop loss is going to be absolutely massive. So this is fine. So if you was in this trade, you know, if you entered on candle open and you saw that the 15 minutes closed back in the zone, you know, you're going to be sort of in drawdown at this point and you're not going to know what to do. Let's just see how this closes. So the 1 hour candle is about to close. The 1 hour candle is rejecting this area up here. The 30-minute candle is about to close as well, about to close bearish. So 5 minutes. The 15-minute candle, it's not really doing much. Let's just see what we can get out of this trade and if we can get a possible entry, right? Because right now we've got a support here. Okay, we've got a new resistance that's been created up here. See how this closes. Okay, so this is what it looks like on the 1 hour time frame. Again, the 1 hour rejected, couldn't close above this resistance. The 4 hour time frame has broken the wick. Couldn't maintain the bullish momentum to go up. 30-minute time frame, it's closed in sort of a fake out, so it's made a fake out to the top side. Let's see now, it's a waiting game. The 15-minute has made support, right? But the range is like 23 pips. It's tiny. So we want to see, we want to wait now and see, you know, what the market does next. Keep an eye on the 15-minute time frame. This candle, you see it closed, it broke the low, it came back up and it closed bullish. So let's see what this candle does. Right now, gold doesn't seem to like this area, 23.95. All right, 30 minutes moving down. Okay, so 30 minutes broken the low, it's coming back down to the support area. Closing in, speed this up a bit here. So the 15-minute candle is also moving down, coming down to the support area they made previously. Now let's see if we can get a close below here. Then, you know, great, we've got like 50 pips to the downside. If we can get again a close back up above sort of 23.97 now, because we've got new resistance created, that's going to be great for us as well. So the 15 minutes closed, rejecting this area again, big wick to the downside, but it's respected the high, so let's just see what it's going to do. So if we can get a close below 23.91, then we've got sort of a confirmation of a fake out, and we've got a nice little bit of range there, like 60 pips to move down. If we can get a close on the 30-minute time frame back up here, so 23.96, we've got a wick to fill like 60 pips. So it's a waiting game. It's a waiting game. Let's just see what gold does at this point. Keep an eye on the time. It's about to close in 1 minute. Right. So now it looks like gold is literally just stuck in this range. It's created a new range. It's just stuck in it. The 1 hour candle is still open. The 15-minute candle is moving down. Right, the 1 hour candle is moving down. Hasn't even come up and created a top wick at all. It's moving straight down. The 30-minute candle is closed inside of this range, so above this previous support. You've got rejection wicks to the left hand side. I'm not looking to take an impulse entry. I'm just looking to wait and see what the market does. If it gives us good structure, it gives us good structure. If it doesn't give us good structure, we keep our 5% profit and we move over to the next day. Trading doesn't have to be complicated if you just sort of, if you can be patient and if you can just wait for the right setups to appear. Right, so we filled these wicks to the left hand side. See how this 15-minute candle closes. Right, the 15-minute candle was closed below this area, but it's quite a big candle. It's like 30 pips. 30-minute candle is still open, right? But it's literally filled the wicks to the bottom side. You've got like another 50 pips down. 1 hour candle is broken the low. The 4 hour candle is rejecting the top side. So let's just see what this 15-minute candle does. Let's slow this down a bit here. Is it going to sort of create support, continue moving up? Is it going to come up, make a top wick, and then start breaking its own low? Again, you've got like 12 minutes left for 30-minute candle to close and the 1 hour candle to close. If I'm not mistaken, yeah, so this is just after London Open as well. Not every day you're going to find a possible entry. Not every day you're going to find, a trade to take. And that's fine. You have to understand that. So what I'm interested in, why I'm pausing it, by the way, is I'm interested to see if it's going to break this low. Right, so it broke the low to the left-hand side. The 30-minute candle still open. Right. So the 1 hour candle has broke both of the lows as well. Really doesn't like that top side. What I'm going to do here, I've got 17 pips. I'm going to enter a small position, 1%, sell. Bring my stop loss here. Okay. Take profits wherever we don't need it. That's fine. Just going to wait and see. If this candle comes up and starts breaking its own high, then we're closing the position. We're going to be out of this trade. Risk our 1%. That's fine. Not going to be involved. It was a maneuver sort of to expect gold to come all the way down after this fake out move to the top side, after breaking the support to the left hand side as well. Let's just see sort of what it does. We've got 5 minutes left for these candles to close. The 1 hour is going to close. The 30 minutes going to close. 5 minutes. Keep an eye on the 15-minute time frame. Right, if the 15-minute closes bullish, then we're going to close the trade. Not involved. So we've got 2 minutes left. The candles close. See what it does. Right. So very, very weak body. Close. The 30-minute is closed as well. And the 1 hour is closed bearish. 30 minutes closed bearish. The 4 hour candle, a new 4 hour candle is opened up at this point as well, with a rejection to the top side. Our stop loss is very, very tight. If this candle comes up and breaks this high, then we're going to save ourselves an additional 5 pips and we're going to close the trade early. Doesn't break the high, continues down. Fantastic. Then we've got, a trade to continue. Let's open up here the trading panel. Stop loss. We're going to add the stop loss. I don't know why it keeps bringing the stop loss so high up. Right, so we're going to have a stop loss here. So we're risking $77 at this point. Right, we've already made like $400 on this account. If it continues, comes down, breaks the low, continues down, fantastic. If it doesn't, then there you go. So it broke the high. That's it. No problem. Move over to the next day. So this is Wednesday, move over to Thursday now. Okay. So again, it's pre-London, 4 hour time frame. As you can see, the 4 hour market is sort of just consolidating in this range at the moment. Right, keep an eye on it. So you got resistance here on the top side. You got range of the resistance around 50 pips. Got another resistance at 2403, and then like 100 pip range to the next resistance on the top side. When it comes to support, so we've got support at around 2383. A lot of wicks here as well, so this is going to be market structure on the 30-minute time frame. Let's see what it looks like on 30-minute time frame before we start measuring zones. Okay, you can tell in the 30-minute time frame, gold is moving up. It's made of resistance up here, right? It's made of resistance. Got rejection wicks to the top side. There's range of around 50 pips if we do get a close above that. Let's just see how this particular candle moves now. What it does. Look on the 15-minute time frame as well. Right, you can see it's on the 15-minute time frame. It's just printed side by side at this point. Not really doing much. So be patient. See what gold does. Cool. So we're up 3.7% or 3.69% on the account. We can get a close on the 15-minute time frame here. We've got good range down to the bottom, touch to the downside. If we can't, then it is what it is. Let's just see. So the 15 minutes closed. Right? Let's just see how the new candle acts. Again, same sort of thing. We want it to come up, make a top wick first, and then come down and break its own low. If it doesn't do that, we're not interested in taking a trade. Keep it simple. Top wicks created. Right, just keep an eye on this. Now, if it comes down and starts breaking its own low, give us a possible entry. If it doesn't and closes back in sort of this range, then it is what it is. We're going to sit here and we're going to watch it. We're going to wait for the 30 minutes close and the 1 hour to close and see what the 1 hour and 30 minutes is going to do. You don't want to be too hasty with entries. All right. So good close on 30 minute above the resistance created. The 1 hour is basically close. It's the 1 hour still open. It's still moving up. Again, not interested in the buy if the candle comes up and starts breaking the high straight away. I'd rather miss the trade than take an entry that I'm not comfortable with. So I want to see a bottom wick made. Once the bottom wick has been made, then I want to see the market sort of come up and start breaking this one high. So you can see in the 15-minute time frame, this is still in a zone. So it's just bouncing around in this zone at the moment. In 30-minute time frame, it's made resistance, it's closed above resistance. Right, bullish candle closed above resistance. Now we're waiting for this candle to come up, break its own high with a possible continuation. If it doesn't do that, then that's fine. You want to take the most probable setups. Let's speed this up here a bit. So with a 15-minute closing, about 7 minutes. So this is very interesting. See the close? It broke the high. Now it's coming to break the low. Right? The 1 hour is also broken the low. The 4 hour candle was broken the high. Now it's coming down and breaking its own low. The 15 minutes breaking the low. But there's no valid stop loss on this trade. So you've got like a 30 pip stop loss to the top side. Right, pre-London's coming up. Gold's not maintaining. I'm going to wait another 5 minutes. If I miss the trade, I miss the trade. I'm going to wait for the 15 minutes to close and see how the 15-minute candle closes. I don't want to take an entry here and have my stop loss all the way back up here. See? You want the 15 minutes to be closing below the support. It didn't close below the support. Right, it rejected that support. Let's see what happens. So the 15-minute didn't give us any sort of type of valid entry. Again, this is a volatile candle. It broke the high and it broke the low of the previous candle. It's not following market structure. So we're waiting at this point. We've got the 1 hour about to close as well. Right? Let's be patient. Let's see how this is going to close. So it's about to close in 5 minutes. Right, so this is a volatile candle. Broke the high and the low of the previous candle. But again, it closed bullish. The 1 hour is also closed bullish. The 4 hours obviously continuing to move up at this point. Right, it's made a bottom wick. The 15-minute is in this 30 range. It's just sprinting side by side, literally side by side. It's barcode at this point. Again, I'm not looking to take an entry in the first 10 seconds of this candle breaking its own high. I want it to come down, want it to create a bottom wick first, and then continue to break the high. And this is why backtesting is great, because backtesting will teach you things like this about your strategy. Right, this is very, very, very volatile. Literally, you got candles in the 15 minutes just printing side by side by side by side. And this is why I found it very important not to take a trade if the candle breaks the high in the first couple of seconds or the low in the first couple of seconds. Obviously, in respect to the trend. See what it does at this point. We've got 15-minute candle closing in 30 seconds. Right, 15-minute candle closed. Absolutely nothing. Gonna have to wait for the 30 minutes to close again. London opens approaching in about 40 minutes or so. So bring us some volume. Maybe it will bring us a nice clean move as well. But right now we're just looking at gold just do nothing. And this is the kind of time when gold's moving like this is when you have to stay away from the buy and sell buttons. So you just have to sit back and just watch how the market moves. Right. Last 5 minutes of this candle, decided to come up and break its own high. Break its own high again on the 1 hour and the 30 minutes. The 15-minute, I'm going to wait for this candle to close. If it shoots up, that's fine. It can shoot up. It's not my problem. We've missed the trade. It is what it is. It's the last 5 minutes of the candle. As you can see, gold is moving very volatile the whole time. So we're going to skip this. Right. So we missed this complete move. Right? We missed this potential 50 pips to the upside. That's completely fine. Now we're going to wait and see if gold can give us some sort of support to continue going up within our session. London Open's approaching. We only trade an hour into London Open. If it does, if it doesn't, and just continues to skyrocket up, then that's what it's going to do. So this is relevant now here. See what it does. One hour just continuing to shoot up at this point. Very bullish. 30 minutes still. See how it moves. Want it to come down, create some sort of support, and give us some sort of clear structure for it to come, just keep moving up. So when you miss a move like this, you don't want to be too hasty in taking an entry, right? You want to wait for a retest. Wait for a retest. Wait for a support to be formed. Wait for confirmation that price can still move up. Wait for market structure that you understand. So the 1 hour candle is about to close. We're coming up into London Open now. So once this candle closes, it's going to be London Open. Let's see exactly what gold does. The 30 minutes is about to close. It's filled this range to the left hand side. This is what we was expecting it to do. It's a shame we missed this move, but it is what it is. It happened in the last 5 minutes of the candle, where the candle moved like 50 pips to the top side. You know, maybe you add an entry on the 5 minute candle. I don't trade the 5 minute candle personally. I stick to these time frames. These are the only time frames I use. See how the 15 minute closed. Right. So the 15 minutes made support. Right. This is London Open. The 1 hour's coming up to a resistance here. Sort of rejected that resistance. It's got like a 30 pip rejection wick. I'm not interested in taking a trade, to be fair. I'm going to skip this 15 minute candle. I don't want this video to be too long. See what it does. If we can get some sort of support on the 30 minute time frame, this is a better confirmation, right? So we got our retest. 1 hour candle closed with a rejection. 30 minute candle closed. It's got rejection to the top side. So London Open now is 1 hour after London Open. There's no trade, right? It is what it is. I have to see what gold does at this point. Absolutely nothing for us. Right, not a problem. Move over to the last day. It's Friday. Cool. See what Friday can give us. Wow, gold really did move up. Mad, 400 pips to the top side. All right. Got resistance, our supports. Mark them out on the 1 hour time frame. See, we got range. Got clean range to the left hand side. Nice wicks to fill. And to the bottom, we got like 30 pips, 40 pips. Let's see what this looks like on the 30 minute time frame. Right. 30 minute time frame. Yeah, so we've got like 30, 40 pips if we include the wick down here. Gold's come up. Gold's coming off the support right now. It's in the middle of the range. Well, 30 pips to the upside. Let's see what it looks like on the 15 minute time frame session. So yeah, we're 2 hours before London. So it's pre-London. Speed this up here a bit. See how it closes. Get a market structure that we understand. If we can get a break and close below 24.20, that's going to be good for us. Then we can look at, obviously, gold continue moving down. If we don't get that and it just starts ranging, then it is what it is. I don't want to take an impulse entry. It's a Friday. 1 hour is breaking the low. The 4 hours about to break the low as well. Just keep an eye on the 4 hour time frame. Right, the 4 hours broken the low. The 1 hour's broken the low to the left hand side, but it is coming down to sort of a resistance level as well, a support, previous support down here, which is like 10 pips away. 15-minute candle still open. Again, this is coming down to support as well. 30-minute candle. Let's just see how the 15-minute candle closes and what it does. Again, if we miss the move, we miss the move. Okay, so the 15-minute candle's closed. No top wick at all. Just come down straight. It's broken the low. Let's just continue. Skip this to get the 30-minute close. Right. The same sort of rules as the previous days. You had a massive move. This candle with no top wick, a lot of bearish momentum. See if this candle can create a top wick and then start breaking its own low, possibly to give us, 30, 40 pips. Take 20 pips out of the trade and call it a week. If it does do that, if it doesn't do that, then let's just see what gold is going to do at this point. Speed this up a bit here. Alright, so the 15-minute candle is about to close in 2 minutes. See how the 15-minute candle closes. Right, so the 15-minute candle is closed bullish. See what the next 15-minute candle does. Obviously, this will determine the close of 30 minutes as well. If we can get a break below this level, then we could possibly take a trade to continue down. But again, it all depends on sort of how this candle moves and how this candle reacts. If we don't, then and gold closes back in the range, then this is going to be sort of a fake out move, and we could look at potential buys. You've got to be fluid in the market. Right, so candle's about to close in 30 seconds. Right, so gold's come down. Let's create a support here. If we can get a break on the 30 minutes, same principle as the 15, then we've got like 30 pips, 40 pips down to the bottom side. 1 hour candle still open, so that means the 1 hour candle will be breaking its own low. Right, the 4 hour candles in the downtrend as well. The 15-minute candles, this one closed quite a strong bullish candle, but quite a big wick to the top side, rejection wick. And this is basically like a doji candle. It's going to really continue moving up. So let's just see now what the 30-minute candle does. If we can get a break, we'll have stops above here, and we'll have take profit. And watch the market move down. If it does do that, that's great. If it doesn't, then we'll just watch it. Keep in mind the 1 hour candle is still open at this point. So the high is broken. Same with the 15-minute, the high is broken. It's quite a good close, quite a strong close in the 15-minute time frame. But you've got literally resistance here, resistance here, resistance here. It's not ideal. It could just be doing a retest for gold to continue moving down. Let's just see how the 30-minute closes and the 1 hour closes. At this point, we've got 7 minutes left for these. The 1 hour's close. Okay. 30 minutes closing. We're back in the range here. The 1 hour's closing back in the range. Right, this is London open. See what we can do. The 4 hours still open at this point. Still bearish. Okay. So the 1 hour candles closed back in the range. Right, what we're gonna do? We've been taking sell. We've been taking buys the whole session. We've been taking sells the whole session. Look at buys here. Okay. Okay. All right. Cool. Except we're going to lower our risk on this trade straight away. Trade stop loss. Visual mode. Let's have a look here. I risk $130 on this trade. Expecting price to keep moving up with London Open. That was great. If it doesn't, then it comes down and starts breaking its own low. It'll be out this trade. The 15 minutes is obviously going to be a significant close. We want it to keep sort of moving up. We don't want market to start breaking its structure. We don't want it to start breaking its lows, right? We're looking for buys, so we need higher highs and higher lows at this point. Cool. Okay, 30 minutes about to close as well. So yeah, 30-minute candle closes. Closing at 5 minutes. Right, so we've got 136 pips, up 5% on the account. Okay, it's Friday. It's your choice. You can hold the account, you can hold the trade open, expecting it to move all the way to the top, right? You can decide to close. What's this? What are we now in? Like 27, 28, 30 pips. So the top side, the candle's going to close in 3 minutes. It's your choice. You can either close the trade and sort of take this and walk away, hold the trade open. You're in profits for the week. If I do hold the trade open, I'm not going to be holding the trade open with, stop loss. I don't want to take a loss on the trade. I'm looking for buys. If this candle comes up, starts breaking the high, it's great. Broke the high in the first couple of minutes, 154. Call it a day here. Close it. Let's just see for demonstration purposes what it did. So it did come up. It filled the area. Amazing. Right. That's pretty much it. So if we look, we're up 5.2% on the account. Right. In a week. All we did was a lot of waiting around, a lot of using sort of higher time frames for confirmations, using lower time frames for good entries, stop loss placements, managing risk, and constantly sort of taking partials, selling BEs. Thank you very much for watching. Obviously looking forward to do the next video. Thanks guys.